So a lot of our subscribers are asking us to analyze Tesla for unusual options activity since earnings is coming up in just 2 days, July 19 after hours. Today, July 17, we detected unusual options activity, so let's get right to it. Today, Tesla rallied 3.2% and it's at $290 per share. And as you can see on the options tape, we have these 5,000 unusual options at 11:21 a.m. This is for the September 15th. And this was the most significant and unusual one today. All right. We can see here also at 9:46, there was 5,965. Okay. So this was for the 270 strike puts for September. So let's take a look at the September 15th, since we have quite a lot of unusual options today above 5,000. You'll see that this 291 was done by the same investor. The other 270 strike was a different investor here. All right. So let's take a look at the options chain. September 15, 60 days away. Even though that's 60 days away, the fact that they are being done 2 days before earnings is still significant. Okay, so the first one was the 270 strike puts. Okay, so you can see here volume and open interest here. Volume is much greater than the open interest. So the majority of these that were being done today are opening trades. Okay, we believe they were buying this 270 strike put here. Most of them were being bought, and that is bearish. As you may know, if you trade options, buying a put simply is bearish, right? You'll see that it is a negative delta here. But keep in mind, sometimes people buy puts because they are hedging their stocks as well. So that's something you have to take into consideration as well. All right, because you don't know if they own stocks as well. All right. Now, when we take a look at the 5,000 that were done, this one was actually at a much higher value. So here they are, the 290 strikes. Okay, you'll see here volume much greater than the open interest, and also on the call side as well. All right. However, on the call side, you could see that there was an open interest of 5,444, and since it was 5,000, these could be closing trades. So that's something to take into account. We do know that the put side were opening trades because of the open interest being less than 5,000. Okay. We believe they were buying the puts here. All right. So whether or not the call side was closing or opening, we know that the 290 strike puts were being bought. And if they were selling the 290 strike calls, this would be what the trade looks like. Okay. So once we take a look, make sure that we're just looking at this 290 strike here. You can see here Tesla at 290. As the price goes down, this trade becomes more profitable since it is above the zero profit loss line on the y-axis. And you can see here this is a negative 100 delta. Okay, so this is a short position. It is bearish, and also quite a lot of value here, because by selling one of these calls, this requires a lot of buying power. It's actually about 14,000 per contract. Okay, and we do have a video. You can quickly calculate that. If you watch that video at the top, we'll link that there if you have info cards turned on. And since they did 5,000 of them, and there were 14,000 each, you can imagine that this is was $70 million. options, right? So a large institution with this much buying power did this trade at 11:21 a.m. today. Okay, so keep that in mind. And so currently we have these bearish short positions on Tesla 2 days before earnings. Okay, and if we detect anything more unusual tomorrow, we'll let everybody know. Make sure to subscribe, hit the bell icon, and you'll be notified. If you're interested in other stocks to diversify your portfolio with unusual options activity, click the join button on our channel homepage to learn more. Take care and good luck on Tesla.